Hello and good evening everyone. Welcome to a new episode of Investing Fool. In today's video, we are going to talk about a bit about rebalancing. We are going to have a thought experiment and or more importantly not rebalancing, right? So I had this itch, so I went and checked the portfolio which we began this journey with, right? So the portfolio in November of 2023, when we started this channel, when we started tracking this our core momentum portfolio, I just had a thought that if I just did nothing with that portfolio, if I just kept that portfolio as it is, where would I be? And to my surprise, that portfolio has actually performed better than our core momentum portfolio, right? So I would have gotten better returns if I just did nothing. I did none of the rebalancing. I just bought the stocks on that day and I just forgot about it for like more than a year. I just wake up from my sleep one day, I go back and check that portfolio. That portfolio has actually returned better than the portfolio that we track, right? So we are going to discuss about this. You may get such data points or such scenarios, right? When you look at a particular instance or something like that, when you feel कि भाई फिर rebalancing का point ही क्या है, right? Why rebalance at all? If not doing anything gives me better returns than doing all this jugglery, then just don't do any churn. एक तो HTCG का LTCG भी हो जाएगा, right? And we will get much better returns, right? So let's take a look at that. And please read the disclaimer for your own benefit. None of the stocks names that we show are for recommendation or anything. This is just for fun. So let's take a look at the portfolio, right? So first of all, this is our core portfolio. So we, on an absolute pre-tax basis, from that time, we are at a gain of around 22.84%. We were around like 40 or something, but with the recent crash, everything has just come crashing down. So we are at close to 23%. Okay. Now, if I go back to this sheet, this is a rough sheet that I created for this. This is the OG portfolio. So these were the stocks that I had when we began this channel. And if you look at how they have performed, so we started with a notional capital of 20 lakhs, right? So 20 lakhs distributed across 20 stocks, 1 lakh each. You buy the stocks on that day. You just kept them. You kept the whole portfolio for more than a year. You did no change at all, nothing, right? And you just wake up, you go and check, and you see that the portfolio has actually done quite well, right? The worst loss that you see here is from Sonata Software, around 16.2%, which is fairly good, right? We have had worse losses than this in our, if you look at our exits sheet, right? So and the best case is also pretty good, right? BSE at 149%. So when we look at such data points, we might feel that why are we rebalancing and all, but the story becomes a little bit more convoluted if you do the same action across different time periods. So that is what I did next. So if I go to this tab, you'll see that if it opens, it has opened. Okay. So in November 2023, like if we just kept this portfolio, so what I did next was that like every portfolio that I have had like every month, so every month's portfolio, I took the same set of stocks and I put the starting capital in those stocks and I never rebalanced after that. So for the OG portfolio, from November there is no rebalancing. For the December portfolio, from December there is no rebalancing. So as and when I did that, like the picture started to become a little bit different, right? So what happened is, like you can see, there are no big losers out here in that November portfolio, and the return tends to be really good compared to what we have earned on our portfolio with so much rebalancing, right? If we go just 1 month later, right, in December, we see that the return if we do not rebalance the December portfolio, if we just bought those stocks in December, we didn't rebalance, the return has changed drastically, right? And there are a lot of like losses are much more, like some of the gains aren't there. So Trent is still here, BSE isn't there. Some of the losses are bigger than what they used to be in November, right? And as and when we go, so when you look at this picture, that November thing of not rebalancing doesn't sound so obvious after that, right? because if you did the same set of action, just buying the same thing and not rebalancing ever after in December, then your returns would be much lower than where we are currently, right? Let's go ahead and look at some of the other months. As we keep on progressing here, some of the losses get bigger and bigger, and we start to see names that we exited with much lesser loss, but if you never rebalance, they just kind of stay there, right? You just be holding those stocks, those losing stocks, as well as some of the winning stocks in your portfolio, right? So in January, again, the returns are slightly above than what we have earned. In February, that return is around 11%, right? So your 23% has become 11%. And why that is happened? Because some of the stocks have given huge losses here. Look at Birlasoft. If you bought it in February, you are sitting at 37% loss now, right? Medanta 29%, IOC 32%, right? So all these have actually brought down the aggregate quite a bit. Let's look at March and April. Again, 11.25, 13.17. Again, some big losers here as well, and not that many big winners, right? So while this starting portfolio had like winners which actually overcompensated, right? If we just take BSE out of this portfolio, this return would be very depressed, right? Similarly, if we take Trent out of this portfolio, this return would be very depressed. But when we come to March and April, there were no stocks which from then, which from March or April did as good as to take the overall returns much higher, right? That's why the overall returns are not anything to talk about. Okay, there is BSE again. This is I guess our second entry. We have entered BSE I guess 2 or 3 times. Every time we get some exit signal, and we have that's a whole another discussion, right? But let's take a look at May and June then, right? May and June. Where is May and June? Okay, so May is at 13.88%, and look at June, right? June is at 3.98%. So you would have earned only 4% if you did the same action of not rebalancing in June. So you see the kind of losses. Many stocks are in red here. There are few greens, more reds. Dixon was there, so Dixon has performed from there till where we are now. But look at some of the other. HAL has fallen quite a bit. Bajaj Auto, you would have exited at a loss. We actually exited Bajaj Auto with a profit because we were rebalancing, right? If we just waited, you never got out of the stocks. Obviously, if you look at it now, you would be sitting at a loss, right? Then Thermax also we exited. Cummins also we exited. Cochin Shipyard we exited with more than 100% profit. If you would have bought Cochin Shipyard somewhere here and you would be sitting on it, you would be sitting with a 35% loss, and just think how much that would have mattered to your portfolio, how much it would have depressed your portfolio returns, right? So let's go ahead, and July, August. Now this is where the picture starts getting really bad, right? Because the stock market has not performed that well over maybe the past 3 months, and even over the past 6 months it has not like done really well, right? Even though we were in the last leg of that kind of a bull rally that was ongoing at that period, and things all seemed like very hunky-dory at that point. But the actual pain starts from somewhere around here, right? July, August. You see most of the stocks now start getting into red territory. So Cochin Shipyard, the fall is much bigger, 42%, GRSE 35%, right? All of these stocks are in red, and your portfolio is now actually in negative. So if you never rebalanced, you would be sitting, even with rebalancing, it is likely that if you started in August or September or October, you will be sitting in some bit of negative gains, but you still would have chance to get rid of your losers when they fall by some X amount, right? You would not have gotten probably to 41%, 42% here in Cochin Shipyard. You would have gotten out much earlier. Similarly, let's take a look at September, right? So minus 13%, October is minus 18%. And look at these stocks that like Bajaj Auto, PCBL, Godfrey Philip, Kalyan was still there until like the last rebalancing in our portfolio. So all of these just kept falling. If you bought somewhere around it, only one stock out of that entire portfolio, which is Dixon, would be in profit. All of them, all like everything else would be in red, and you would be sitting at around minus 18%, right? So that's the reality. Again, December doesn't matter as much because it was just a month back, December 2024. Even with November 2024, and there is obviously much pain that happened in January, but the loss was around 13% here. So the point of all this was something that we will discuss quickly here. So does the rebalancing period matter? Of course it matters. We have we had put out a video on this as well, based on Rajan Raju's sir's research paper, and you can find that link. It should be in the video description as well. That is based on a research paper, and that is not just a random fun thought experiment like this. But we know in general, academic research suggests that momentum effect works best between 3 to 12 months, and that effect starts to dissipate after 12 months, right? It generally starts to dissipate after 12 months. So your rebalancing period, whatever is there, right? Most people, like most academic papers, do it monthly. We also started with monthly, then I found some rhythm in bi-weekly, so we are currently doing bi-weekly. There is not much advantage of a bi-weekly compared to a monthly, or even a weekly compared to a monthly. In some situations it might feel good, in some situations it might feel bad. Churn will obviously increase, but overall, like, and you can see like some of these NSE indices, right? They rebalance every 6 months, right? So wo to alag hi league mein hai. So you can take like 6 months, 3 months, whatever, but you have to rebalance in the sense that you have to take a revised look at the portfolio that you're holding, and you have to see, like, are all these stocks even performing or not. And if someone is not performing, it is important to get rid of those early. We know this instinctively, but when we come across such use cases कि भाई तूने कुछ नहीं किया रहता तो like the return would have been so much better, right? Then we need to think about whether that is a truism, that whether that holds across different time periods, right? If we do not have that starting point bias, whether the same result holds. So as I said, rebalancing might seem pointless in certain specific examples, certain specific use cases, and especially when everything is going up, right? The entire market is going up, then you don't even feel the point. You won't see the impact of rebalancing, right? Because you will exit some stocks, you will get into some new stocks, that stock is also going up, again you exit some stock, you again get into some new stock. किसी ने कोई random portfolio बना लिया, right? That monkey dart throwing experiment you might have read about. So such a portfolio will also do good, right? If everything is going up, then there would be just fun and joy all around, and all portfolios will keep going up, and you will never feel the impact. Rebalancing karo na karo ek hi baat hai, everything is going up, right? The problem starts when some of those stocks start underperforming, and you need to get rid of those. Okay, as we discussed, starting point bias may make certain numbers look good. So just like we saw कि अगर नवंबर में start करा था तो I would have earned much more than my current portfolio. If I would have done the same thing in December, I would have earned less than my current portfolio, right? In every portfolio that we just saw, there would be some large winners and some large losers as well, right? किसी में नहीं होगा, किसी में like, and that is why there is this divergence, right? In some portfolios, just by sheer luck, there won't be any large losers and there will be some large winners, तो उनका return बढ़ जाएगा, right? Somewhere else there will be a lot of losers and maybe a few large losers, but not such big winners, right? In those cases, the returns would get depressed, but mostly it would be like a Gaussian curve. So most results or most outcomes would be in the middle for momentum buy and hold portfolios. I don't think there is such a thing as momentum buy and hold portfolios, but if we had to just do this sort of experiment कि खरीदा momentum के हिसाब से पर rebalancing नहीं किया, so it became a buy and hold for me, right? So and another important point is there would be lots of regret, because when you look at those past portfolios, now I look at that November portfolio and I see बस अगर BSE को नहीं बेचा रहता तो I would be sitting at 150% profit right now, right? And that's a different discussion why we exited BSE. Can we like tweak our exit parameters somehow? But at the same time, there would be other stocks which if we had not exited, then we would have like seen massive losses there as well, right? So there would always be stocks that you exited midway. Motilal Oswal is another example, which then like they crashed, somehow they gave you an exit signal, you exited, they then resumed their momentum and then they performed well in the end. So when you look at it from a hindsight, then it feels like bas agar nahi becha rehta, I would have gotten so much better, right? But that's just that's sort of like looking at specific scenarios and feeling that regret. You can't help it. There is no way. If you build a system, sometimes it will work for you, sometimes it will work against you. That's the reality that you have to live with. So I am recording this on Sunday, but I guess I'll put it out tomorrow sometime. But yeah, that's pretty much it that I had to discuss. If you like this content, like first of all, let me know if you have ever done this, like you got into some sort of a momentum portfolio, or if you are a fundamental like buy and hold type investor, then to like this doesn't apply to you, because your entire thesis depends on buying and holding for long periods of time. But if you have taken like momentum portfolios and you have experienced something like this, if you had done nothing, then it would have been much better. Then please let me know in the comments below. Also let me know what you think about this sort of video. And if you haven't subscribe to the channel, then please subscribe to the channel. Like the video if you like the content. ये तो normal सी बात है. And then I'll see you in the next video. Till then, take care. Bye bye.